viewers, I'm Moneypig Trading today, May 20th. Just want to give you guys some context. Right now, the market is pushing back into the close. 380, which is our target, we mentioned technical chart level. Once 385 breaks, that is a level that's hit and start to bounce back. And I think the market bounced back because part of the reason is FDA official says the monkeypox is not a public health threat at the moment. So if you look at SPY, looks like it's pushing back from the year low, but during the intraday we did touch the year low. Still a really big bear flag going on daily, and with the downtrend going on, really hard to know where the bottom is. So usually what we have to do if you want to invest in good quality stocks is keep adding on each critical level, is what we have been doing. We're adding AMD, we're adding some other growth stocks and high quality shipping or value stocks with good dividends. And basically that's our strategy. And but in the meantime, keep holding some SQQQ hedging. Once the market continue to go down, expecting those high quality assets, the long run 2-3 years later, the price will come back up. And in the meantime, the short term, the SQQQ shorting on the market, especially on tech, will gain some profits. So that's basically the long-term investment strategy. Swing trading has been extremely difficult, as you might notice, right? Even though the market is a downtrend, but you have to buy a longer dated contract, and everybody is expecting a big move on the market every day. So the premium on both sides are just super duper expensive right now. So you have to buy a really expensive, not very good risk reward, longer dated put. And the market is very volatile. Probably next week, on Monday or Tuesday, maybe we'll have a nice pop. Depends on the minutes from Federal Reserve. Things can be really choppy to hold put. Sometimes if we use a 50% stop loss, can easily touch. And then, ended up that put still become 150% return. So kind of hard to hold any longer dated puts. So right now we're more focused on day trading. And right now looking at the market, I still think the bottom is around here, or at least in the near term, like we have been seeing. Nice push into the close. Right, white. First of all, fix has been rejected at this 30 again. 32 has been the short-term pop, or in that level hold we have 34, but it's never going to above 40. So it means the market has a certain level of fear, but it's not as extreme as like 2008 or 2001. Back to 2001, there's no fix. But in 2008, that drop in the market, or even during the COVID-19, March 2020, we did see the drop in fix push back up to 75, right? We don't see that. And right now, the inflation fear is the most driving force to push down the market, right? And but right now, we have been saying TNX is peaking in the short term. Right now, it's been 4A EMA crossed the downside. That's probably telling us the inflation is at the peak at the moment. But of course, it depends on the CPI number. So kind of maybe you want to see the CPI number for the next round, like right now. I want to know how bad is inflation, right? So I think the other concern the market has is the 5-year yield. Right now it's higher than the 10-year yield, and that means the yield curve inverse. That usually means a good indicator of recession. But based on our in-house model and looking at other economists' model, the chance of recession in next year is still pretty low, like 30-20%. It's because the employment rate is so low, everybody's working, inflation is so bad, retirement people, they don't have enough retirement money anymore, they come out to work. And that's why you're seeing so many, old retirement age Uber and Lyft drivers right now, right? If you take those gig services. So it's kind of like a high level in the market. And if you look at FANG, bear flagging, right? Apple bear flagging, downtrend in tech. And one thing I want to mention is, even though SPY holding a year low, but if you look at this weekly chart, we have been 7 weeks straight down. The last time it happened is 2001, so potentially more downside to come. Still holding 15-20% of a cash and long-term investment with hedging. just in case. Since swing trading were reduced in size, the SPY trade this morning or overnight didn't work. I was expecting a gap up and potentially push back to 400, but once this 392.5 level didn't hold, you see how fast SPY flushed down. But we have a nice 3 wins day trading, 100% winning rate, so it's doing pretty good. Yeah, if this continue, Apple do have room to go down to 130 and potentially 123 resistant. And Tesla pretty heavy too, right? Very expensive for the put, but we do have around this 630 level gap fill around here, and that level doesn't hold. We're gonna see 620, 600. And 500-ish pretty quickly. Even drop down to 500-ish. The PE ratio is still around 70, pretty high. But if you really, or investor value Tesla by how much market share it can take on the EV market, still pretty good since nobody can produce enough cars right now. But yeah, with more competition coming out, supply chain issues started to come back down in 2023, 2024. Tesla's EV dominance can be affected, right? But however, they're going to release a bunch of other products with scalability, with production, right? The robots, the Tesla phone, Starlink, and Cybertruck. So yeah, we might see a lot of excitement on Tesla next year. We don't know. I personally might pick up some shares around 500-ish, but we'll see. Depends on how the inflation goes. Facebook, we're still holding the long term. It's one of the chart that looks better in FANG, right? Push back down right now, just lingering around the low. Google, Amazon, all bear flagging right now. Again, Google, I'm still waiting for 2,000 to have potentially add more stock. Revenue growth is slowing down, so getting this punishment on the stock price is not too surprising. Amazon is even worse with all the retails slaughtering this week. Their earnings kind of as confusing as Johnny Depp's lawsuit, right? Like Target, Walmart doing really bad, but some retail names are doing bad. Okay, Target has been holding out from this low. Same thing with Walmart around 120, right? And the other one that's doing okay, TJ Maxx, doing okay. It's actually gap out from the earnings, and now does it fill this gap down below, right? BJ earnings is doing okay, but being pulled back down from the general market. And Ross, the earnings is horrible. So what's going on with this retail, right? Very interesting. All their margins are affected by inflation, of course. So seen a brutal sell-off, and not only just from Amazon e-commerce, but also brick and mortar retails, and that's what I've been seeing this week, and that's why the market have next leg down this week. Wow, nice bounce on 380 to 388. Yeah, that's on the Google and Amazon. So last one on FANG is Nvidia. Almost break the year low, but right now holding out together with SPY. A huge downgrade from Wells Fargo this morning, from 340 price target to 250 if I remember correctly. So that kind of triggered the downside today as well with the monkeypox and all the retail pessimism. Last and most, SBOK earning next week. The dry bulk shipping index is actually breaking out. So I do expect this guy is going to have good earnings. Maybe I'll add some lotto. Watch this BDRY, right, flagging to the upside. Next leg coming, and that is telling us actually economy worldwide is probably doing okay. A lot of people are still ordering those commodities and ship them, right? So traditional bullish seasonality May to July for dry bulk, and I do expect with all the cash flow they have, they're probably gonna do share buyback again, and or maybe increase the dividends. I was looking at 32 call in June. The problem I didn't buy is, okay, first of all, earning always has a risk. And look at the chart, SBOK and other dry bulk is always like this super duper choppy, right? It's really hard to hold it. So I was a little hesitating. So that's on SBOK and dry bulk shipping. This ship also have earnings Tuesday morning. We're also holding it with some dividends, which I believe they will also increase the dividend as well. Maybe do share buyback at this price. We'll see. Container shipping right now, we're just waiting for the Shanghai reopening fact to kick in. Probably still need to wait another 1 or 2 weeks, I don't know, to see if the container shipping rate, the spot rate will continue start to push back up. Right now, just range bound. Last year, this is the same range bound between this 50 and 60-ish. So not too surprised, a lot of resistance and volatility here. But yeah, still remain bullish, and especially on long-term investment, we have a lot of time with 30% dividends. See no reason to take this one off. While the market still off so hard today, right? Spike down, QQQ down. Zim is actually one of the few stock that's green today. That is telling us something, all right? Definitely a great way to park our capitals at the moment with 30%. I mean, right now it buys probably about 25% dividends at this price. Yeah, a lot of mid caps still holding up, guys. So, and SPY QQQ holding the year low. That's maybe, again, hard to guess the bottom. Maybe the bottom's here. So again, add gradually on long-term stock. Reduce on swing trading because the daily volatility is ridiculous, and yeah, focus more on day trading. That's kind of a high level what's going on the market. The other thing I want to mention really quick is on the crypto. Crypto has been in range bound since the slaughter last weekend from the Terra Luna. Right now, if you look at this, we'll probably right now is a bear flagging, okay, on the daily, but it can also start to form bottom and start to crawl back up. Really depends on the inflation, I guess, and for money there start to come back in. So I've been patient only at one single Ethereum right now. Yeah, trying to see if this level can hold or not. If not, Ethereum come back down 1500, I plan to add another one coin. So again, adding gradually for the long term, and hard to tell where the bottom is. Next week earnings, we do have Zoom. Sorry, not Zoom, Zoom. I see a lot of call sweep potentially. We might see a breakout, and the P is pretty low now on this stock, and yeah, a lot of damage from the all-time high 400, right? Like down, I don't know how many percent, 80%, pretty crazy. Yeah, definitely getting attractive on this price again. But I didn't add in Lotto because next week implied volatility is so high, the premium is like super duper high, like 95 call is still like $6 or $5. I'm like, hell no, I'm not gonna pay for it. Maybe I'll do some vertical spread, but I want to see how the market closed today first. So maybe I'll do it on Monday. Yep, it's kind of high level. I'm not sure if I have time to do work on the weekly email, so I'll just make this short video. I mean, my wedding ceremony the original place I booked got canceled, so all of a sudden, so I need to spend this whole weekend finding another place for the venue. Really sucks. But yeah, been really crazy schedule in the past few weeks, so I know I've been lacking behind like sheet update and everything. I'll try to my best to catch up and also making some YouTube videos, but maybe that won't happen until my wedding in July, so we'll see. Okay, not a bad day. I'll see you guys on Discord. And again, if you guys feel very frustrated about this market, take a break, no hard feeling. Or if you have a question, make sure to reach out. I have people reaching me out after a substantial loss, so if you feel really confused, just chat. I'm very open. Rome is here too, so don't be a stranger, okay? Thanks for joining, guys. See you. I'm gonna stop this recording now.